FX. We are back again, and today we should be looking at some things. All right. So now today we'll be looking at the strategy I use. Last week, if you've been following me on TikTok and Facebook and some of my social media handles, you'll see some of the trades I've been posting out there. I've been posting my trade for last week and upper week. I've been trading 8K accounts. So currently I'm on the phase two. So uh, I know some people will be wondering what I trade, how I trade, my strategy for trading that account. So here is it. I'm here to break down, to just give a hint about the strategy. So now let's look at this now. You can see from here, as a trader, you need to have what we call the microscopic this thing. You need to have this structural way of doing things. You need to always start your analysis from the higher time frame. You can see this is the daily time frame. So on the daily now, you're not here to take trade on the daily time frame. You're not here to make your trade on the daily time frame. You are here to pick your structure. You are here to know the direction of the market. So that's what you do on the daily time frame. So on this daily time frame now, you can see, what do we see here? Market has been pushing up, creating highs, lows, highs, lows, highs, and lows. So currently at this point here, you can clearly see that the market is still on an uptrend move, and at this point here, this market is ranging. It's ranging. So now let's move to the 4 hours. Now on the 4 hours, what do we see? The same uptrend, a strong bearish momentum candle. Like you can see, this is a very strong downward candle. This is a very strong downward candle, telling us the market was bearish from here to this level. At this point now, market starts recovering itself. The market started recovering. It started pushing up, creating these highs, lows, equal top here. Then the market has failed to take away this level. As you can see, now the market is pushing down again to this point. At this point now, this market started pushing up again, back to the same level, failing to take away this level. This will tell us that this level is a very key zone. It's a key area that if this market eventually breaks out of this area, we can see more buys to the upside. So now let's move to the 1 hour. So the 1 hour is where we do our major analysis. This is where I know whether I'm buying or I'm going to sell. So with what I'm seeing, the market is actually buying on the 1 hour. And if you want to judge, you can use your patch, which is from here to here. This is a high, this is a low, this is a high, this is a low, this is under high, low, and this is under high here. So now I'm expecting this market to calm down. I'm expecting this market to push back from next week, which is Monday. This market should push back at least to a level here, then come back to take away this high and start pushing to the upside. Understand? So this is what I'm expecting. So currently now, what do we do here? Now let's do our analysis properly. So what are the tools I use? I use my Fibonacci levels. My Fibonacci level, what do you check? You see from the low the market has created up to the high. Market has taken away all this level here. Let me mark it out for you to see clearly. You can see from here to here, market has taken away this structure here, and from here market has taken away this structure too. So now from here, now I take this Fibonacci level. This is a low, this is under low here, so I will go with this low from here up to this point here. So normally I'm supposed to wait for this candle to close with a red candle telling me that this market is dropping before taking away this, before marking out my Fibonacci level. But since the market is closed and this is on a Sunday, so for the purpose of this analysis, I'm going to use this for we to just to know to feel the grams, like to have a knowledge of this strategy. So from Monday, you might see this market start coming down with red, or you might see this market pushed above this. if the market push above this, you wait for it to close with a red candle on the 1 hour, then you mark out your Fibonacci level to get your golden zone. So what is the golden area? This is the area I call the discount zone. We have the discount and the premium zone. So now let's take, this is the low which I marked my Fibonacci from, and this is the 50% retracement. So, and this is the highest high that this market has gotten to. This is the highest high here, you can see. So now what do we do now at this point? What do we do at this point now? So at this point now, what you do here at this point is to wait for a retracement back to this premium zone. So what is the premium zone? The premium zone is area that is below 50%. So this premium zone means at this level here, it is cheaper for you to buy. But this up here, this is a discount zone. This up here is expensive for you to buy. So whatever the market is doing at this point here, I don't care about what the market is doing, because this is an expensive level for me to buy. So from Monday, if this structure hold, I'm going to wait for this market to push back to this discount level in this manner on 15 minutes. Then you wait for the market to break structure, come back to retest this place, then give me a green candle closure. At this point, I can now get my buys. You understand? Can I get my buys? So you are taking your entry from here. Your stop loss should be below a structural level. You can see, which is what giving me about 39 pips. This is a structural level. That's to tell you that this market, before this market to take you out, it must clear this first structure, second structure, and this third structure. Do you get? For this market to take you out. So you are actually on a structural level, which is an ideal place for you to place your stop loss. Do you get? And now targeting the highest high this market has gotten to, you see that this market is on 1.96 risk to reward. That's to tell you that you are risking 1% to gain 1.96. So for me, sometimes I close at 1.95. I go with 1:1, 1:1.5 risk to reward. It's not necessary to close with 1:1.2. That's my own ideology. You understand? In your own case, you can decide to go for 1:2. I don't really send about 1:2. So now, another way, this is the first structure. Do you understand? So mind you, I don't tighten my stop loss because I want to risk 150 or I want to risk 100. I have to make it to be on a structural point. You understand? An area whereby if this market should get to that area, you should know that yes, this market is invalidated. You are out of the trade. You're officially out of that trade. Do you understand? Not placing your stop loss based on your feelings, based on how you want it, based on the fact that you want to risk maybe 150 so you can target 1:2 or 1:3. Do you understand? So this is why I place my stop loss at that level. Then this under structure, let me give you the second structure in case this one fail, because one thing I'll tell you for free, no matter your entry, you can't always get that exact entry. You can't always get that exactly entry every time. You understand? So since I trade one pair, I have to have scenarios, because market is all about probabilities. You understand? It's all about probability. Probability means if and if and if. If market do Y, you have to do Z. If market do A, you have to do this. If A plus A plus A plus A plus C is equals to this, then you do this. That's what market is all about. Not you telling the market what to do. You react based on what you are seeing in the market. You understand? So now, let's go with this second structure. This second structure is that I'm expecting market to create this move, come down as usual. Market should bounce here, create a move, bounce like this, break out, take away this structure. Market taking away this structure is telling you that I am tired of going down. It's time to go up. Do you understand? So this is what this structure means. So you have to wait for the market to take away this structure. As soon as the market take away this structure, it's telling you that there's impulsive move coming, that the market is about to start pushing up. So at this point now, you are waiting for this market to create this level, take away this structure here. As soon as the market push back, wait for it to come back to a level. This is a level here, a minor support level. So as soon as the market come down to this level, You have this, you close the green candle. This green candle, you can wait for it on 15 minutes or 5 minutes. So let me mark it out so we can see that point. You can see this is a level here. So this is the level here. So at this point now, so at this point now, you can see at this point now. So this one will give you a smaller stop loss. You can see this one is 31, the other one is 39. So almost the same thing. So now from here now you are targeting this level. So this 2.83. You understand? So at this point now, you can see. So on Monday, I'm expecting this kind of structure on Monday. As soon as I see this kind of structure on Monday, I'm going in for my trade. So guys, um, thank you for watching. You can, if you gain value from this video, you can give us more likes and so on and so forth. So uh, this content will, I think I will keep dropping more educational videos like this so we can also learn. Thank you. Have a wonderful day and God bless you.